So we're now going to have a look at question 12.2, also from the October 2021 paper. We've got a provision for doubtful debts account. The Clare Limited maintains a provision for doubtful debts at 2% of trade receivables, and they had a provision brought forward. So at the 1st of May 2020, they had a provision of 786. And it tells us that their trade receivables at the 30th of April 21 were 33,450. So just a reminder of how the provision for doubtful debts works. It's a provision that reduces the value of an asset. In this case, it's the value of trade receivables. So when you do your current assets, you'll list trade receivables at their full amount and then show a provision for doubtful debts, reducing that balance. And this is the prudence concept in action. So trade receivables were 33,450, but it does tell us that there was an irrecoverable debt of 1350 that's not yet been accounted for. So we do need to remove that before we go any further to find the trade receivable. So that one will be credited from trade receivables and debited into the income statement. So this 1350 is going to be an expense on the income statement, and that will leave us with trade receivables of 32,100. So we can then work out our provision for doubtful debts based on that amount. So we want the provision to be 2% of that 32,100, which is 642. So that's actually lower than the brought forward figure, which we've got there, 786. So it's actually a decrease in the provision of whatever the difference is, 786 minus 642, which is 144. And that would be shown as other income on the income statement. Or you could net it off against the actual doubtful debt, the irrecoverable debt that's been written off. But the decrease is 144. They're not asking us for details of what's going to go in the income statement, though. They want us to complete the provision for doubtful debt. So this is the one that goes on the statement of financial position. So it's the same as a provision for depreciation. It reduces the value of an asset. So on the 1st of May 2020, we've got the BAL BD, which is 786. We want the balance carried down on the 30th of April 2021 to be lower than that. We've already worked that out. That needs to be 642. So let's pop that in there. So the difference, the 144, at the end of the year is going off to the income statement. So income statement there, £144. And we can balance that off. Both sides add up to 786. And remember that the mark isn't going to come from the BAL CD on the 30th of April, it's going to come from the BAL BD on the 1st of May. So balance brought down 642. So pretty straightforward, another 3 marks. Thanks for watching.